Hey, hi, my name is Ryan Walker. I'm a senior mining analyst at Echelon Capital Markets with another installment of Echelon's mining Q&A series. Today we're joined by Duncan Middlemiss, CEO of Wesdome Gold Mines, which is growing production at Eagle River Mine near Wawa, Ontario, and well on the path to restarting production at the formerly producing Kiena Mine in Quebec. Hi, Duncan. Thanks for joining us today.
Hey, my pleasure, Ryan. Thanks for having me.
So just before we really dig into things, I guess if you could just maybe give us a little update on your status of your operations as it pertains to COVID-19. I know operations at Kiena have resumed earlier this month, but just what kind of capacity would you say you're running at both Eagle River and Kiena?
Okay. Well, we were fortunate that Eagle River wasn't mandated to shut down as the mines were in Quebec, so we've been able to maintain our production guidance. I would say we had to thin out the camp significantly though, so we had to cease all of our exploration drilling. So we had 7 drills at Eagle, 2 on surface, 5 underground. We're just now at the point where we're getting those back up and going. So we've got 2 underground drills going and a surface drill going. So kind of close to 50% capacity at that point. What we're doing at Eagle is very sort of methodical and stepwise, reintegrating more people into camp, ensuring that we have the social distancing and the hygiene and all the other protocols we require to remain COVID-free, which we have been. So I'd have to say that that's coming back more to closer to 100% slowly but surely, which is good. We maintain our production guidance, as I mentioned before. So really by June 30th, we do believe that we will be at sort of 50% of our budget. So we are right on track. So we had a very good first quarter, sold 26,500 ounces, and great gold price and the whole bit. So one of the unintended consequences of COVID, I suppose, is we continue to produce gold, we continue to sell gold, but all of a sudden, for a good period of the second quarter, we weren't drilling with 14 drills, and so all of a sudden, cash is starting to creep back in, which is good. Over at Kiena, as you know, we lost 7 weeks. It was mandated down. We do have 7 drills operating there right now. However, we're only operating Monday to Friday. The reason is we have a lot of diamond drillers from the Montreal area, and of course Montreal is a COVID hotbed, and so really it's been in isolation compared to the rest of Quebec. So again, I would think that within the next 2 to 3 weeks we should probably be back at 100% there, but. That seems to be the effect right now. So we're trying, really hard to get our budgeted exploration meters done for the year. But with a 7 week hole in the year, that's going to be difficult to do.
Sure. No, we're glad to hear there were no positive cases. That's great. So
yeah.
Okay, well, let's just jump right in. We're especially grateful you taking some time now with the Kiena PEA out, and obviously a very robust PEA. It's not every day you see a triple-digit IRR on a project of consequence, anyway. So maybe if you could just run us through the key highlights from the PEA.
Yeah, I think really as you referenced, I mean the IRR being 102% really is a basis of the really meager initial investment to get this thing going. I mean, the situation we have at Kiena is, number one, the resources that we've been able to discover in the A zone especially are extremely high grade, as it is right now. And of course, we have another resource update coming out probably at the start of Q4, but the indicated part of that is 18.5 grams, 400,000 ounces of that, another 340,000 ounces of inferred in the A zone at 15.2. So that certainly sort of fuels the revenue side of it. There's no doubt about it. But the fact that the mine is essentially all built, all permitted and everything else really gives us that advantage. So, I mean, a pre-production CapEx of $35 million just really drives this thing home that, wow, this is just a really robust project. And I mean, not often you think you're going to end up with an IRR of over 100%. I mean, that's not really a common sector, a 1.7 year payback on it. And I think really what we recognize though, because of the meters of drilling that we're doing, so the last resource we did at Kiena was September of 2019. And that's the one that identified, the 740,000 ounces of gold in the A zone. Right now, we're drilling very diligently in order to convert the inferred category up to the indicated, because, of course, the next step after the next resource update is going to be a PFS. For a PFS, you can only really recognize reserves or measured and indicated resources. So all the inferred would drop off the table as it is. The one thing I can tell you, though, is the conversion of the A zone inferred into indicated is very high. We haven't done the actual calc on it. We're not done yet, but I got to tell you, it's been 100%. So we're very, very pleased with that. I think what you'll likely see down the road is maybe the indicated actually can move up a little bit in grade even. So it's really exciting.
Okay, and so you mentioned the PFS and the updated resource in Q4 and then early 2021, I believe.
Yeah.
Aside from bumping up the inferred material into indicated, what other optimizations or improvements? Not that the PEA needed it; the numbers were fantastic. But what else might we expect to see?
Yeah, so I think it's based on the resource. So we think that the resource probably we can grow it definitely. I think that and in order to make it value added for a PFS is going to have to be in the indicated category. So we are focused on that. I think anything we find in that area from 670 down to 1050 is going to just be so much value added. We don't really have any of that in the PEA right now. So we do have a great opportunity to, I would say, that would be early ore for us. So we'd be able to get into that quicker. So the 450 tons would definitely have a lot of upside too.
Right, because you're already planning development in that area anyway. So whatever you find close by is kind of gravy to what the PEA had, I guess.
Yeah, actually, yeah. I mean, the VC zone, it looks like it stretches down to 790 anyways. So that's the thing that we always saw from that location, because it is beside the existing infrastructure of the mine. You've already got the escapeway and the ventilation, which is already established. So you could have 4 mining fronts into that area in no time, So as opposed to, the single heading down ramp, which we are getting a bit of a start on anyways. I mean, we are developing the down ramp right now in order to enhance our drill platform for the mineralization at depth. So it's going to give us a head start.
Okay, and you mentioned the modest capex. I mean, it's under $50 million. How do you plan on financing? Just internal cash flow, presumably?
Yeah, absolutely. I mean, Eagle River is, it's getting more and more profitable every day. Kind of, we have $50 million in the bank as we speak. We got a $45 million revolving line of credit. We have no debt. As it is this year, I mean, the plan was to spend $44 million at Kena. It was all going to be funded from cash flow from Eagle, and we were going to remain flat. Our budgeted price was $18.85 per ounce Canadian for gold. Here we are at $400 or $500 north of that right now. So basing, the next run rate at, 100,000 ounces, I mean, we're going to, basically end up with another 40 or $50 million in the till than what we had expected at the time. So yeah, we feel pretty confident that there's no financing required. It's going to be a turn. Yeah.
Okay. And then prior to COVID-19, you had some very aggressive drill plans at both Eagle River and Kena. Obviously, the 7-week temporary shutdown there at Kena impacted that. So what are the budgets at each as far as meters, and what are the goals for each for the balance of the year?
Yeah, so really right now we haven't given up on our budget at Kena. So Kena was 75,000 meters underground, 10,000 meters on surface or from another platform underground. We haven't really determined it. Really, that was set aside to examine if there was another target that would be similar to the A zone. As you know, Ryan, the A zone is a right L shear, and often these right L shears go in parallel. So we do believe that there could be another parallel structure there. And if it's anything like the A zone, I mean, we'll be definitely in good stead there on that one. At Eagle, it's going to be a little bit harder to catch up. I mean, as it is, we've only got 2 underground drills going down from the 5, and we've only got 1 surface drill going from 2. So, yeah, we haven't examined exactly where we would end up. The total meterage that we had for the year was 235,000 meters. I would suspect if we got, north of 200, 210, we'd be doing pretty well, actually.
Okay. And you mentioned using the A zone as kind of a new exploration template. Are there targets out there that will be drill tested in that regard?
Yeah, absolutely. Yeah. So during February, we conducted what they call an MT survey, magnetotelluric survey. It's a sort of deep-seated geophysics examining, what is down 1 kilometer, because that's really where our target area is for the A zone. And we just how things, the mineralization on the Marbenite and Orbenite regional faults, what we see is sort of a trend that would indicate that it seems similar to the A zone, just off to the east there. And that would make sense, that you'd have another sort of closely spaced Rydell shear on that one. So we look, looking forward to that. I mean, that would be very exciting if we were able to do that.
Yeah, for sure. Okay. And then I guess just looking further out time-wise, you get Kiena up and running, presuming there's a positive production decision, which it seems there probably would be.
Yeah.
So you've got Eagle running, you've got Kiena running, cash flowing. Do you see maybe the potential for them to help finance the Moss Lake project at some point? I know a feasibility study would have to be updated there, but what's the future there, do you think?
Yeah, you know what? I think the way to look at it with Moss Lake is it's got huge optionality to the price of gold. And whether it's a project, let's face it, you liken Moss Lake to a large open pittable. Is it equal to like a Cote or a Rainy River or something like that? I mean, that's going to be a big capex for a little company that's got $50 million in the bank right now. So our ability to bring that through to fruition right now, I would say, is on the lower scale. Really the strategy for us in order to get to the mid-tier status is definitely optimize Eagle and get Kiena up and going. I think that's the most efficient thing we can do in the short term. Longer term, I think that we do definitely want to put some money back into Moss Lake in order to upgrade the resources there. We do see a nice 8-kilometer trend of mineralization along strike, and we're pretty comfortable that, yeah, it could be a very big system, but it's certainly going to take time. It's going to take time and money. And right now we're on, I'd say, a quicker growth plan than that. So the focus is on those 2 assets. Kiena.
Oh, sure. That makes sense.
Yeah. But you know what, Ryan? It doesn't really cost us anything to hold on to it. And although we're not, I would say it's on the back burner, but we still do look at it and we work at it a little bit. I definitely think it is a project that merit. Like I say, it's the company's largest, inventory of resources, right? We've got 4 million ounces in indicated and inferred sitting on everything from the cold stream down to the Moss Lake. So it is.
Yeah. I think that's a pretty good overview or recap. Like I said, we really appreciate you giving us some time so quickly after the Kiena PEA. That's fantastic. And so my kind of stock question at the end of these, I'm going to pin you down to your outlook on gold. I need it down to a penny.
Need it down to a penny?
Not really. Just
okay, hold on. I'll consult the Ouija board that told me 1885 Canadian was the answer for 2020. So I really don't know. Listen, I'm supportive of gold too. I think that what we see, I think we're a couple of seconds away here from seeing negative rates, and I just saw a correlation between the amount of negative interest bonds and the price of gold, and it's a perfect correlation, you know what I mean? And I think that what we're seeing now with all the monetary stimulus going on, it only makes sense that gold is going to be that tangible asset that holds its value. And 2020, I think we are definitely going to see probably 1850 US.
All right, I'm going to hold you to it.
Okay.
All right. Well, thanks very much. And again, congratulations on the PEA. Fantastic. And I've been covering Wesdome since geez, early 2016, and it's seen me through some pretty grim markets. It's been a nice story to cover. It really has.
Good. Well, no, appreciate that.
Okay. Well, thanks again, and hopefully we can catch up with you in another month or two and see how things are going. And hopefully it's in a post-COVID world at that point.
Yeah, maybe face to face, Ryan.
Yeah, that would be great. Okay,
Good.
Duncan, take care. Thanks very much.
Okay, thanks for having us.
Okay, cheers. Bye-bye.